Welcome to Cross-Border Tax Talks, where we discuss the latest trends in international taxation, from US tax reform to the OECD's latest developments on Pillar 2. I'm Dom McHoney, PwC's US International Tax Services leader. You can watch these podcasts on YouTube at youtube.com/Doug McHoney. On this week's episode of Cross-Border Tax Talks, we're back in our Washington D.C. Policy on Demand studio, where I'm excited to be joined by Dom Megna. Dom is a tax partner and the leader of PwC's US tax reporting and strategy practice. Dom advises multinational clients on transformation and digital enablement for tax and finance that drives efficiencies and performance, including the use of automation and standardization of processes for enterprise-wide platforms. Dom, welcome to the podcast.
Thanks for having me, Doug.
So Dom, I'm usually very comfortable with the material that we're talking about here on the Cross-Border Tax Talks. And I'll tell you, I want to warn you, I'm a little bit over my skis on this one, but there's just been so many questions that we've had, the taxpayers have, about our Pillar 2 calculations, that I'm really excited to have you on and try to understand a little bit about how companies are going to be able to source their data for Pillar 2.
Sure, absolutely. I totally get that. It's obviously something we're dealing with too in trying to figure out, as you know, as you and I work together on different initiatives around this.
Right. So before we dive into the Pillar 2 discussion on operational readiness, I did want to start with the big trend that we're seeing as multinational companies move their ERP systems, or enterprise resource planning systems, or what I would refer to as their accounting systems, to the cloud. I had Mohammed Kandi, PwC's global consulting leader, on the podcast a few months back, and we talked about why it's important to have tax at the table for any type of business transformation. So maybe again, before we get into Pillar 2, and I think this is a good tie-in, can you start by sharing why it's particularly important to involve tax as taxpayers move their ERP systems from behind their own firewalls to the cloud?
Sure. Let's talk about it in two different ways, right? I think thread number one is really around the fact that from just a general tax treatment perspective, there's a lot of pay-fors that are available as you're doing some sort of ERP transformation or moving systems or consolidating systems out of jurisdictions, teams out of certain areas who may be functional specialists as it relates to those tools and are moving in different states or wherever you may be moving into the cloud. Those pay-fors can take the form of R&D credits, right? If you're doing anything organizationally around a large-scale ERP transformation, you can look for opportunities around VCT planning that obviously can provide some pay-fors for that level of project, right? So that's one level that you can get tax involved.
And just to make sure that I understand what you mean by pay-fors, that obviously there's significant cost and expense that companies incur to be able to move, whether they're consolidating systems. You're right. This isn't relevant just for companies that are moving from behind their own firewalls to the cloud. It's like any time that you're going through an ERP transformation and resetting up or setting up a new or reestablishing an accounting system, there's obviously significant costs associated with that.
Absolutely.
And so the idea is that, well, if we can get data in a form that can allow us to be able to take advantage of tax credits or tax efficiencies, that can potentially pay for a good chunk of that project.
Right. There's that data. There's the movement of the actual systems. There are credits associated with various jurisdictions where maybe you're hosting that particular solution and where those teams sit. So that's one thread. The second thread is obviously the functional requirements that are needed from a tax perspective, right? You have direct, indirect tax requirements, transfer pricing. And when you think about what's going to be required as a tax end user, it's interesting. I was just on a phone call with a taxpayer who's gone through a 4-year implementation of one of these ERP platforms, and tax didn't have as much of the opportunity to be at the table talking about what the requirement needs are, what do they need to be doing around fixed assets and AP as it relates to tax. And it's actually resulted in tax now having to do more manual work than what they had to do prior to the new ERP implementation being implemented. So if you think about that, it's a huge opportunity for tax, but it also acts as a catalyst for tax to also take advantage, well, I don't want to say take advantage, but look to areas where maybe you can look to transform your tax function around its operating model, how it's using automation, obviously how it's reporting, how it's dealing with new reporting requirements like Pillar 2, and how do you think about making sure that that's making its way into the ERP as it's being set up?
Yeah, the point on if tax is not at the table, though, what if not? I mean, like, listen, there may be some obviously pay-fors that are missing, but I think the other really important piece is, like, I mean, what we're seeing amongst taxpayers and even obviously within our own organization is just resources are scarce, right? And so trying to do whatever you can to try to minimize whatever additional adjustments might need to take place, because that takes time, it takes people, there's cost. And so if to the extent that tax can get at a seat at the table and we can get the data in a form that allows us to do our provision, our compliance, even our modeling, those taxpayers are going to be in a lot better situation as opposed to just kind of taking what they get from the ERP systems and then having to make those manual adjustments.
Absolutely, right.
From your, I mean, is tax usually involved in that from an ERP perspective? What do you see from just a general trend perspective?
I think it's definitely been a trend in the right direction.
Okay.
To get tax more and more involved. I think historically, and look, the move to the cloud is a huge catalyst in terms of opportunity within organizations. And we didn't see this 10 years ago, right? You had on-prem solutions, and that's where everybody went, and you had a team that you worked with to get the reporting, and tax could get what they needed by interacting with IT, whoever owned that particular platform. Now, obviously, with the move to the cloud, it's causing both finance transformation and tax transformation to need to come together. So tax now, really that trend is, if tax isn't involved, the question is, why don't we have tax involved versus we don't need tax involved because they'll figure it out after it's set up and they can get the reporting that they've historically gotten.
And the reason for the move to the cloud, and correct me if I'm wrong, is largely driven by the big ERP providers, right?
Correct.
In other words, they want to move stuff from behind their client's firewall right into a cloud-based system for, frankly, a number of reasons.
Right. Yep.
But that's really what's driving a lot of this. And so for some of our listeners of the cross-border tax talks that may not be quite as involved with this, that change, that movement to the cloud is a catalyst, to your point, for a lot of change. But that may not be the only catalyst. To your point, if there's a big acquisition and companies need to combine, ERP systems, that could also be a catalyst.
That's definitely true. Yep.
All right, so let's move to our discussion on Pillar 2, because I think that really kind of starts to set the table of, taxpayers are going to need a new whole set of data in a form that, frankly, we've never seen to be able to do these calculations. So we're going to talk a little bit about people, data, process, and technology over the duration of the rest of the podcast. But I wanted to start with really what I would call the elephant in the room, which is really that starting point for the calculation, which is for US GAAP taxpayers, and I'll remind listeners that it really depends on what the financial system is at the ultimate parent entity, but I think we have a lot of US MNC, so we'll talk about US GAAP, but this also could be relevant for IFRS. But for US MNCs that file under US GAAP, they effectively need to have US GAAP financial statements by constituent entity.
Right.
How easy is this, Tom?
Well, I guess it depends on your legal entity structures, right? But I would say it's not easy, right? Because you're moving from what has historically been, I needed to get legal entity GAAP. Now I need to get what is considered a constituent entity. And it's a hard enough process for many organizations, I would say a vast majority of the organizations or taxpayers that I work with, just to get to legal entity GAAP.
Right.
And understanding the various relationships and how to back out certain entities in order to get to GAAP. Now you're adding in a new component, which is this, we'll call it it's not really a calculation, but how do you get to constituent entity, right? And that becomes a process that you have to understand and compare against how do you get to US GAAP? What's that process? Now you have to map out, okay, how do I get to constituent entity, and what are the steps involved? And understanding how your data, and to your point, the elephant in the room, where are the gaps in your current data? And how do you fill those gaps? Is it pulling in data from other systems, right? Accounts payable, if you're using a separate fixed asset system from your ERP platform, where do you get that data? Who's the stakeholder that provides it? The format, the data hierarchy, which is really important because that's how you basically combine or decombine to get to US GAAP, right? Now, or if you're foreign stat reporting as well now, it also starts to play into this. And how do you think through that process and then understand where those gaps exist is that's the starting point. And that's already complex.
Right.
for GAAP purposes.
Right. Yeah, and I'll remind folks that to the extent that a constituent entity, even a constituent entity, has a permanent establishment, that we also have to do the separate calculations by permanent establishment.
Right.
And my first instinct when I was going through those rules is like, oh, well, if you have a permanent establishment, you already kind of have to put together standalone financials, if you will, to file typically in that local jurisdiction wherever they have the permanent establishment. But just because you've complied with the local law on a permanent establishment and even report a balance sheet and P&L, that doesn't necessarily comply with US. It doesn't mean that it's US GAAP.
Right,
I mean,
right.
what the numbers and the data that we have for a permanent establishment may not be anything remotely similar to what we need to have as like a standalone US GAAP financial for that or IFRS for that permanent establishment.
Right, exactly right. And it like when you think about this, it is basically adding in a whole new reporting regime that into the construct of your tax function. Right. And historically what you saw, and I know we're going to spend some time on people and process, right? But just to hit upon this, right, you saw the construct of the tax department really be built around data flows, right? You had a person who was specific to international, right? Obviously you had a structuring person, but you had someone international, state and local. You may have had a transfer pricing specialist, fixed asset, right? Obviously someone who's responsible for the provision, the income tax reporting. But now you're finding there's a whole new layer of calculation, a whole new reporting regime that you need that data for, and how does that flow through, and how does that individual now who's responsible for it understand how to be ready to really not only just forecast on this as we start to think about it, planning around it, obviously, but then there's going to be the actual reporting that's going to be needed in the future around it.
Yeah. So let's it's a perfect segue. Let's unpack some of this people stuff.
Sure.
Because, we've obviously spent some time within our organization thinking about who are the right people that we need at the table. And there's obviously international tax specialists like myself. There's data and process specialists like yourself. Right. We've gotten the tax accountants involved, and then we've had a number of calls and questions with the tax accountants. And I love, we got a quote from one of our tax accountants was like, guys, this isn't a tax accounting question. This is an accounting question. So then we needed to bring in the accountants. We've got the tax accountants. So it's really a broad team of people that are required. So what suggestion recommendations do you have for taxpayers as they're trying to pull these teams together, particularly in an environment where resources are scarce?
Right.
We know that tax departments are, under a lot of pressure to streamline things. I mean, this is just, to your point, this is an entirely new system of data and calculations that have never existed.
Yeah, and so before I jump into how I would suggest maybe starting to approach it, something that we see too is you also have all of your foreign teams who are involved in this as well. Yeah. And so with that, right, it really comes down to having, I'll call it a governance structure around it. And that's setting forth as an organization, and whether it starts with I'll call it a steering committee or a stakeholder group, really setting forth what is the charter in terms of how you're going to approach it. Who are the individuals? What are their roles and responsibilities? Right? And where is it going to sit? Because that's the other thing. I would say I've probably had 5 conversations with 5 different taxpayers in the last week and a half about this, and everybody has a different idea about who should be responsible for Pillar 2. Whether it's the controller group, someone within tax, someone within, maybe it's the farm reporting teams. It's a little bit all over the place right now. And what we saw be very impactful was, let's get a group together. Let's level set. What are we trying to accomplish? What do we want to have planned? What is going to be the charter that we're going to follow in terms of how to meet that? Who's going to be responsible? And this kind of goes a little bit more to process, but who's responsible for monitoring what's going on and understanding the rules changes? And how does that then impact things that are already starting to move forward versus what do we now need to go back and change? There are a whole host of different things that you have to think about here. And having that level of, I'll call it a concise working group, is really critical here versus saying to one person, well, you own Pillar 2 reporting, and now go off and figure it out.
Yeah, and we're going to come back to this, but one point resonated with me as I've particularly been focused on the calculation aspects of this and the calculation engine. that what a challenge it will be as each jurisdiction, because at this point we have model rules in the commentary, right? We're recording this, it's June of 2022. We're still we're supposed to get some UK proposed rules. We're supposed to get some implementation guidance, but it's very possible, and I think very likely, that we will have multiple versions of Pillar 2. In other words, each jurisdiction, and we've seen this, there's a lot of precedents with even the EU anti-tax avoidance directives. Like every jurisdiction will have their own little tweaks. And then we have to run the same data set, presumably, through a calculation engine that could have multiple different calculations per, for jurisdiction. And it's just going to be very challenging for taxpayers to try to manage, and they're going to need somebody from a technical perspective to try to manage all those just think about what you said, right? And now think about how you would align, if you could align one person into that, what their responsibility, they would need to be thinking about things from just an overall policy and legislation perspective, right? And understanding what's going on, who's implementing, when are the proposed rules coming out, which jurisdictions, right? Then there's an actual impact analysis. So somebody actually has to sit down and say, okay, what's the impact to us on day one if that is implemented, and in terms of from a proposed rules perspective, if it is implemented, well, how does that impact us? How does that then impact in terms of how we operate, just from an operating structure perspective, and how we respond to it? And then the third area is around structuring. Like, what does that do to our current legal entity? What should we be thinking about in terms of opportunities maybe to restructure or think about structural changes to navigate through what these rules are? And again, it comes back to, if you had just one person responsible for that, it would be an overwhelming task, right? And you would be asking them to have basically wearing 4 different hats at one time around how you approach this. Right. And as we think about those people, I mean, there will be, when these rules officially come online, or assuming they officially come online, there's obviously the provision aspects, right? So public companies are going to need to think about the provision. There's the compliance, right? So companies are going to need to comply. We still really don't know what that's going to look like, but hopefully that is streamlined and consistent across multiple jurisdictions based on the implementation guidance that we get, and we don't have multiple different different variations of forms. We'll see how that works, and then to the other point is modeling, right? Like, because if companies are going to be doing transactions, whether it's intercompany transactions, whether it's a disposition or an acquisition and then an integration, it's going to be really important for companies to understand what those Pillar 2 implications are. And I think imagine, a company buying a company and wanting to integrate their intellectual property, for example. Well, you start moving IP around after these rules, and you're going to create a massive amount of globe income. You better make sure you understand that before you pull the trigger on a target.
Yeah, absolutely. So, when you think about that, right, you laid out like 3 different streams of, we'll call it process, that need to occur around planning, forecasting, and actual, that are all going to need now to be restructured around how Pillar 2, or how the Pillar 2 calculations in all of the jurisdictions where you as a multinational have presence are going to need to be included. And with that, this obviously creates a ton of issues in terms of how you think about that process and how that process factors into your own controls framework, right? When you start to think about this is an actual tax liability that needs to be reported and recorded and reported, and with that, comes a whole host of process and SOX-related controls that need to be taken into consideration around how you do that.
Right. Yeah. So help me understand, because as we move to process here, this obviously will need to be run at the time of your US GAAP provision, right? Because this is going to be an actual tax liability, which presumably means it needs to be done on forecasted figures.
Right.
So help me understand kind of how that process works as we move from forecast to actual, and as we think about just an entirely separate system that we need to do, I guess similar to what we do for our US tax and our foreign tax liabilities.
It is very similar, right, in terms of how you move from forecasted to actual. But with that, the rules and how those rules, whether they include or exclude certain things such as deferreds in those calculations plays a huge part. So again, it comes down to, you're really operating in almost like parallel work streams around how you do something like a forecast to actual, and now layering in what could be a liability to the organization. And that creates a lot of challenges, like we've been talking about around the data and the process, who owns it, and just in general, right? How do you actually get there in that calculation, and what are you doing in terms of using technology or various processes to help with it, but owning that process and how it'll maybe eventually audited, which is always in the back of the mind of every tax professional, is a critical component that we don't know either.
Right.
We don't know how the taxing authorities are going to review this.
Right.
We haven't gotten any visibility into that. And that makes it very difficult, right, to be able to stand up the right level of controls in order to be able to make sure that you're not going to put yourself in a bad position in the future.
How do you compare this, Dom, to country by country? Because the way I think of this, like country by country is really this first kind of what I would refer to as a multi-jurisdictional reporting requirement. Now, obviously one big difference is country by country reporting didn't result in any actual tax liability, right? But it really was that first kind of cross, pan-global, cross-jurisdiction reporting. Is there anything that you've learned or taxpayers can learn from that process?
I think it's a great question, and you hit it, right? Obviously, that's more informational reporting. But what it did require, which is something that if I'm listening to this as a taxpayer, I say, well, at least I can leverage how we dealt with the foreign data reporting, collection, whether you were using a technology platform for that or you were using some sort of ingestion to collect that information from those that's going to be needed here. So there at least is that framework in terms of how you reached out to each one of those foreign reporting teams to collect that data. And maybe in some ways there was some automated collection that brought it into a warehouse, which would be an ideal state. And there are some organizations that have done that. You can at least leverage that here as a starting point to help with this from a calculation perspective. But I also go back to the fact, typically what you'll find, it's a very small group of individuals in the tax function that are responsible for CBC, right? And you can't do that with Pillar 2.
As we discussed, this is going to take a much broader
Exactly.
Okay, so let's move to data then from process. And the way I think about kind of the data, I really view as three kind of primary components, if you will, to the calculation. It's getting to the constituent entity, US GAAP, right? And then what adjustments need to be made then to get to the globe income, which is more kind of, I would call more of a calculation than even a data extraction exercise, but we'll unpack that a little bit. And then the calculation of covered taxes, right? And then once we've got the covered taxes and the globe income, we can then determine the potential top-up tax. So we already touched briefly on the challenges of getting the US GAAP data by constituent entity, and then which ultimately leads to the adjusted globe income. But maybe talk a little bit like for me, and I think from a taxpayer perspective, typically US GAAP, and I think this is a little different than IFRS, and I will acknowledge I'm not an expert in either of these, but from a US GAAP perspective, the US GAAP, and I've got an accounting degree, I'm not a CPA, but we do stuff on a consolidated basis, right? Here in the US from a US GAAP perspective. And what these rules require us is effectively to kind of deconsolidate that. So that, how do taxpayers, from a data perspective, go about that?
Yeah, well, let's kind of start first a little bit high level around what you described, right? It's like we talked about, the legal entity, just GAAP data. For Pillar 2, right, there's also, and going back to ERP, there's also the need that some of that data is not just going to exist in the ERP platform as well, right? So we talked a little bit about the farm reporting, but you're going to need, your payroll data. Fixed assets, again, could live outside of that ERP. So just your starting point in terms of data collect could require that you're going to multiple systems. You may be going to multiple ERPs too. It's not uncommon, probably for a lot of listeners, to have multiple ERPs within the organization, in their organization. And with that, because of acquisitions and other organizational changes, could require you're getting different, I'll call it different format sets of data as your starting point. So then
and just to
go ahead.
interject there on because your point is a good one, and I should have mentioned is like you also have to calculate the substance-based carve-out, which requires fixed assets and payroll. Right. And so that's just another example of data that may or may not exist kind of within that existing stream. It's a really good point. So that's your point, that you may need to have multiple different sources to be able to get to all the aspects of the calculation.
Absolutely. Yeah. And so you have, I'll call it quality, issues associated with that consolidated GAAP data that you're starting with, right? Because within that GAAP data, there may have been adjustments that were made. You could have topsides that were made in order to get, for GAAP purposes. You may have had, adjustments that were made in the following year, and you're pulling prior year data. There's a lot of things that can happen as it relates to just overall the data and the quality of that data that may have happened throughout your process that now is a new starting point for you for Pillar 2 purposes. Right. And then like we were talking about around constituent entities, right? You have really, how do you think about it on a country, I don't want to use country by country, but it is sort of, jurisdiction by constituent entity, jurisdiction by jurisdiction basis. And there can be FX currency changes, all of those types of changes that would impact on that data that you need to be thinking through at each of those constituent entities. And then you're going through the use of, you may have GAAP information where, financial accounts that are maintained in local country GAAP versus what you're doing for US purposes. So there's a whole host of ways that the data can be different based on each one of those constituent legal entities that you have to have a process built around.
Right. Yeah, and the way I think, that at least the way we've been thinking about it, is what we've done is we've built kind of what I think we've been referring to as a data input catalog. It's just like, okay, what is all of the information that we're going to need? And then it's like, okay, well, where do we potentially source this stuff? And one of the challenges is like that there are certain decisions, right, that need to be made. For example, like as we think about covered tax expense, and this is just one example, like do we include, certain types of refundable or non-refundable credits, right? Presumably it'll be hard for a system to be able to determine whether something should be in covered taxes, should be outside of covered taxes. And so, it really takes some manual process to be able to decide kind of what ends up in which bucket.
Well, what you're describing, right, is operational readiness. When you think about the fact that, as you described, right, we don't know when these rules are coming. We're expecting that at least, some form of, like sample rules based off of jurisdiction will start to be released that we can start to work with. But having an approach, right, is a critical component here. An approach that the organization has agreed to, that stakeholder group that I said has agreed to. That's operational readiness. Now, obviously, it may need to change when the rules become final in a particular jurisdiction. And then we can get into that from a process standpoint, because that comes back to who owns this, who's responsible for maintaining it on a regular basis, monitoring what's going on in the various jurisdictions to be able to make sure that you're integrating those changes the right way. All of that comes down to how operationally ready are you in terms of your organization to be able to do these types of things.
Right, and this is not going to be static, right? Like you can imagine whatever the first version of the rules, even as they get implemented, just like in every other country. But what's fascinating, this will be kind of across the globe, but you can imagine as territories, as different jurisdictions implement these rules, tweaking the rules, as they get feedback from taxpayers, discover challenges, issues, whatever the case may be, and having somebody to be able to help manage changes to the calculation. And this is a complicated both data gathering and calculation exercise. I can see be very challenging.
Absolutely, and if you think that you can, I'll say this, when you think about those dependencies, in terms of that calculation, in terms of dependencies as it relates to each one of each foreign jurisdiction and how those rules can change and will change in the future as you described. Managing that from a process standpoint is going to be difficult enough. Now managing a calculation and something that's static is going to be even more difficult.
Right. Yeah, and I think that is a challenge anytime you're trying to operate, taxpayers are trying to operate in a spreadsheet environment, that can be very challenging to be able to have to try to update. And I mean, that would just be multiple tabs and just a very complicated calculation to try to do in a spreadsheet environment. So, one of the other challenges with data collection that as we've thought about trying to do the calculation is trying to unpack intercompany transactions that were otherwise effectively, I don't know if disregarded is the right term, but otherwise may not have been maybe scrutinized as much from an accounting perspective, because companies would say, well, we're US GAAP, we file consolidated, it doesn't matter that I've moved a asset from one US subsidiary to a second US subsidiary. And then, there's also challenges with respect to dividends and intercompany transactions that similarly may not have gotten a lot of scrutiny, if you will, from an accounting perspective.
Well, I think using the term scrutiny is a good way to kind of frame that up now. But if you think about how what we've been seeing so far in terms of the rules, right, all of that factors into now within each one of those, foreign jurisdictions, how you get to globe income, right? And with that becomes a whole analysis around understanding how does, the tax function, what is the current process around what you just described, whether it's intercompany or something else, and how does that now change as it relates specifically to your Pillar 2 reporting needs? And that requires really sitting down and having that process mapped out so that you do understand what's happened or what historically has happened, what goes on, at each point in your reporting cycle, and then being able to say, okay, now what do we need to adjust as it relates to Pillar 2, and that also factors in to how you structure out that that committee, that team that's going to be responsible for this. They need to have that connectivity across all areas of the tax and accounting function to be able to understand this.
All right, so let's move to here at the end towards technology now. And this is something where I'm absolutely kind of over my skis on. Help me understand, where, and I appreciate there may not be a perfect answer to this, but, the ERP systems, right, general accounting systems, there are providers out there that do provision software, for example. There's obviously providers out there that do tax reporting software. I think there's others for fixed assets. Any thoughts or clarity on where's the right starting point? And I appreciate, I guess it's probably just still too early to know how some of these different service providers are going to be able to try to source data for these calculations, but kind of where are you as far as you're thinking about this and as you're thinking about, and advising taxpayers?
Sure. Look, there is no one solution that solves this.
You can't just plug in your cable and just like
Unfortunately, it's not as easy as just connecting your iPhone and it's going to, get you
all the data pops out. Okay.
But this does factor into how you approach it, right? So when you think about operational readiness for this, it really comes down to understanding, your current technology stack and understanding what we were just talking about, the process and the data. How does it align in with your current technology stack? Where are there gaps in terms of that from a technology reporting perspective? Again, if you think about it from an output into, let's just call it a workbook perspective, and then doing calculations there, that's probably not going to be the most robust solution to handle this, because you have the data gathering that we were talking about, the deconsolidation to get to constituent entity, breaking out where you've had intercompany, right? All of the different adjustments, right? Being able to do that in a manual fashion obviously is going to take a lot of time and is prone to a lot of risk of just manual error.
Right.
So think about that technology stack between ERP. Where do you do some form of data aggregation? Where maybe do you do data aggregation and move that to a service provider who has been developing some sort of service around, the calculations, developing the technology around it, and maybe it's some sort of co-source arrangement that you engage with them in around that. Because to build something like this, maintain all of the rules, all the rule changes, which is more,
Right.
I would say more of the even complexity. We haven't even gotten to that yet.
Right.
But as you said, we know that there will be changes, whether it's year over year, quarter over quarter,
Right.
just as comments start to come back on this. Maintaining that for one organization is going to be a very heavy load. So how do you think about that right alignment with a service provider to assist you? And where can they use technology? Where can you use some of that technology? How do you work together with them is critical.
All right. So maybe I'll with the last word here, Dom. What should taxpayers be doing now for operational readiness? Because as I think about the timing, right, there's still tremendous uncertainty, with frankly what's going to happen with the EU. There's uncertainty. We know that we think that the UK is intending to at least put out some model rules. They had originally said that it would be April 2023, where that at least the IAR would come into play with the UTPR not till the following year. We've seen that the OECD has already suggested moving the implementation date from December 1st, 2023, or excuse me, from January 1st, 2023 to December 31st, 2023. I don't really know what that means as far as moving that, but just I think they probably wanted to accomplish 2023. But I mean, even if it's the slips, as we said earlier, it's 18 months away. What should taxpayers be doing now immediately to get ready?
Yeah, I think that, I'll frame it up around a couple of things. Number one, focusing in on getting together a stakeholder team around this. And like we've been talking about, that includes not just only internally within an organization, but their service provider as well as a part of that team, right? How are you going to approach it? Who's going to be responsible for what? What is the overall charter in terms of over the next 3 months, what do we want to accomplish? What do we want to have stood up? And then it's starting to move through that from a work stream perspective. I think that the best place to start is, okay, understanding where are you going to have, at least in the current state, and this could change depending on how things are implemented, where are you going to have reporting requirements? Okay, so how does that factor into what our current process is? And then how do we start to approach it from like what we've been talking about? Who are going to be the people? How are we going to source the right data? How are we going to do it from a technology perspective? And really getting agreement around that as an organization, and then starting to drive it forward.
Right.
So it's not necessarily overly complex, but if you haven't started already thinking about each one of those things and have a working committee set up that's operating and trying to structure that out and interacting with service providers, you really need to immediately.
And it's going to be a big cost, right?
Yes.
Even if taxpayers want to do this internally, just the amount of additional resources, your technology point, the data sourcing. And so I think my advice would be try to understand those costs, obviously, of complying with these rules. And then, of course, as we've said many times at the Cross-Border Tax Talks, modeling, really understanding, assuming these rules come in some form or fashion, as we've gotten from the commentary and the model rules, communicating up to management, what the potential tax consequences are. And, as we've also mentioned on this podcast many times, certain jurisdictions, even if their statutory rate is well above 15, like the US, we've found that the globe rate can be below. And so, communicating all of the operational aspects as well as kind of the after-tax P&L financial statement implications is really important.
Yeah, absolutely, Doug. And I'll go back to what I said around ERP. Here's a catalyst that if I'm a head of tax and, as I'm working to try to get budget for automation, technology, transforming my data, here's a catalyst within your organization that's coming. So use this as a way to make sure you can get in front of it. The budget that's going to be needed around this is a way from a tax perspective to really catalyze a lot of your own transformation.
Yeah, that's a perfect way to end right where we started, where as we're seeing these major transformations and for ERP systems, start thinking about Pillar 2 and making sure that that's on the work plan.
Yeah.
All right. Well, thanks for tuning in to this week's episode of Cross-Border Tax Talks. Thank you, Dom Megna, PwC tax partner and leader of PwC's tax reporting and strategy practice, for joining me on the podcast. I'm Doug McHoney, PwC's international tax services leader. Stay tuned in 2 weeks for another exciting edition of the Cross-Border Tax Talks podcast.
This podcast is brought to you by PwC, all rights reserved. PwC refers to the U.S. member firm or one of its subsidiaries or affiliates and may sometimes refer to the PwC network. Each member firm is a separate legal entity. Please see www.pwc.com/structure for further details. This podcast is for general information purposes only and should not be used as a substitute for consultation with professional advisors.